Hey, this is Lorrie with Business Resource Partners. We're starting a new series called Tax Tips. Much to our dismay, we're coming up to the end of the year. 2018 taxes are due soon. We wanted to help you and everyone out there with some tax tips. The new tax reform jobs has really changed some of the things that we do as business owners, especially. So our goal is with these tax tips is to help you with some of the things that we're learning along the way. Today I want to tell you a little bit about some accounting methods that are changing. The Tax Cuts and Jobs Acts, better known simply as tax reform, is really what we're talking about. And this allows more small business taxpayers to use the cash method of accounting. If you weren't aware, if your business made more than $5 million in a year, you were required to report on an accrual basis. If you're a business that runs high receivables or have contracts, construction companies happens frequently, have contracts that they're not going to collect the money this year, but they had to pay taxes on it this year, and then the contract falls apart, then they have to recoup that. It can be a nightmare for a small business. The new tax reform has changed this, so there's now an annual gross receipts threshold from $5 million to $25 million, and they will index this for inflation. This can be a huge benefit to a small business that has a lot of receivables or high contracts. There's also some exemption and accounting rules for inventory, cost capitalization, and long-term contracts. So these are going to, again, help you as a business owner not having to pay taxes on monies that you haven't earned. This goes into effect after December 31st, 2017. So again, that's all of 2018. So when we file your tax returns for you, or you file them, or your tax preparer files, make sure you're aware that these new changes for 2018, we don't have to wait till we file for 2019. One other quick little thing I'd like to bring to mind is like-kind exchange. I don't have the link for that on this particular screen, but we'll get that for you if you're interested. Just wanted to let you know that there's some changes with real property. Only your real property is going to be eligible for like-kind exchanges. If you see section 1031, it tells more about it. Your personal and intangible taxes or property, will not be affected by like-kind exchange any longer. But do remember, if you're doing a flip or you're holding property just to resell it, it does not count as a like-kind exchange. It is just short-term capital gains. So again, Lorrie here. We are available to answer any questions. We're doing tax planning currently, so we can see what your tax situation looks like, so we can make some adjustments by the end of the year if need be. Call us at Business Resource Partners 321-236-2771, or visit our website. We made it simple, www.brp.team. We are going to be your team. We're with you and your business. Thanks again. We'll talk to you soon. Bye.